The future belongs to those who dare, those who will do extra. Hi, I'm Mark Croskery, and welcome to the final Business Life Extra episode of the year, the program that looks beyond dollars and cents to the movers and shakers in business and the capital markets. Today's guest has over 25 years of experience in the areas of media, investment management, and real estate. He holds a bachelor's in Spanish and economics from the University of West Indies, UWI, and a master's in economics from Dalhousie University in Nova Scotia, Canada. He has held several senior executive positions in leading investment houses and is a former senior director of investments at Jamaica's National Insurance Fund, NIF. He's also an avid member of the Real Estate Board of Jamaica. Have you guessed it yet? Let us welcome today's guest, Kevin Richards, CEO of publicly traded Kingston Properties Limited, KPREIT. Kevin, welcome to Business Live Extra.
Thanks for having me.
It's great having you on.
Same here.
You know, we really haven't had a pure, 100% real estate play. We've had on some investment houses, private equity,
Right.
mixed with a few other things, but it's good to finally have on a pure 100 real estate play.
Well, happy you invited me, and I'm happy to be here and to share with your audience everything about KPREIT.
Yeah. Talking about that, how did you've done many things. Media, you even studied Spanish, which was a pleasant surprise.
Yeah.
And you've been in the financial sector for 2 decades plus. How did you jump into this role in 2015, 6 years ago, and start getting into real estate? And in fairness to you, and to your credit, you've really turned the company around now, where there's a balance sheet of 45 million US, just under 50 million US, and it's been a big turnaround. What made you pivot into real estate?
So everything is almost like a lead up to something, You start one thing in life and then you never know where you end up. I think a lot of it has to come from my passion for investments, and it's not just in equities or fixed income, but also in terms of real estate investment. If you think about it, the asset class that has over centuries been the asset class that has given the most stable returns has been the real estate asset class. And from a long time, I've been interested in that field. Now, having worked at the National Insurance Fund, for example, which is the largest pension fund in Jamaica, certainly when I was head of it.
Is it in the Caribbean as well, or
no,
just Jamaica?
Certainly when I was there, it ranked maybe fourth behind smaller economies such as Barbados, Trinidad, and the Bahamas. And that's largely because they had higher contribution rates than we do in Jamaica. When I left the fund, it was roughly about $600 million US under management. But it had a portfolio which was about 14% that is comprised of real estate assets, which ranged from different types of subclasses. So we had a lot of hospitality in there. We had commercial and residential. So my passion for real estate really started there.
From the NIF days?
From the NIF days, yeah.
And of course we know you buy into what you're cooking, and we know all the old time sayings, they're not making any more real estate. I mean, persons are building on it, it's being bought up, etc. Yeah. But how do you sell KPREIT? What do you like about it? Besides all the old adages that we know of. Yeah.
Certainly one of the things about it is our strategy is one of immediate cash flow generating one. So we focus a lot on acquiring assets that are immediately generating cash flows, because at the end of the day, we are using shareholder monies and they want a return on that investment. You can give them a return in the movement of the stock price, but largely some people really want dividends. And for you to be able to pay them good dividends, you have to be generating high levels of cash flows. So that's part of our main strategy, that we are a cash flow generating real estate entity in the first place. The other aspect of it is our diversification, because even if you look at what's been happening with the pandemic as an example, what we've been doing in terms of our own risk assessment is looking at the different economies and the sort of measures that each country has been adopting in dealing with the pandemic. And from that perspective, we look at those that have been, what those measures have been and how likely they are to come out of the pandemic in a much better position, or even at the same level they were pre-pandemic. And that's one of the things we noticed, that those economies that were growing at a faster clip pre-pandemic, we think that pace is likely to continue once they've eased some of these containment measures. And that's why we particularly like the U.S. economy and the Caymanian economy, because they were growing at 4, 5, 6% per annum prior to the pandemic,
Yes.
and I think they're going to continue in that sense. So our diversification, I think, is one of the main things.
That's one of the big things you talk about at your annual general meeting, or whether it's in roadshows or just speaking with analysts.
Yeah, absolutely. Yeah. That is something that sets us apart.
A question I get a lot, and you just hear throughout the community is, what's the difference between, say, a KPREIT, maybe even Epic Caribbean Property Fund, First Rock? I mean, you find in Jamaica investors generalize a lot when they just say real estate, but what's a unique selling proposition, or what exactly is KPREIT?
Yeah, and the thing is, there are different people who are in the real estate space. Certainly, when we started back in 2008, it wasn't as sexy as it is right now. We were one of the first players as a pure, as you describe it, rightly so, a pure real estate play that was listed on the exchange. I mean, there was there were conglomerates there.
And you say you haven't really shifted into, I don't know, derivatives or private equity or pure buy equities, right? You've stuck it.
We're pure real estate. I mean, the business is going to be shifting a little bit more into some type of private equity, but it's still going to be real estate focused.
Have you done, Kevin, during that period of time, say 13 years or so, have you done any like mortgages or reverse mortgages or any like lending to try and bump up your yield?
Nope.
Okay.
We've strictly stayed with the pure real estate investing. And it's interesting you mentioned yield, because one of the things, and certainly the thing that separates us, is that there is this great misconception that you have to do development projects or greenfield projects to generate a high yield. And I disagree. Our model is focusing on what we call the value add proposition, which is, those properties, there's another term for it, some people say brownfield, but, value add is more the appropriate term. And those are properties that you can acquire, they may need some improvement, but you generate cash flows immediately. And once you make those improvements, you can generate even 50%. We've had that experience with one of our properties, where we've seen a 50% improvement in the value of that property over 2 years of acquisition, just by going in and making improvements and changing the tenant base. So once you make the improvements and you change the tenant base, you can actually attract market rents. And that eventually leads to a higher valuation for the property. So whereas with a development, you're sitting around for 1.5 years, 2 years before you start generating the cash flows.
And you have
from day
risk
one
factors coming in. Yeah.
Exactly, there's construction risk. From day one, you're generating cash flows, and at the same time, you're also bumping up the valuation of the asset.
So how do you deal with it? I mean, as a CEO, you came into the fold 2015.
Yeah.
And the company has dramatically turned around. I mean, Victoria Mutual came in. Yeah. Would you say it takes a team and a board of directors, but have you single-handedly really turned around KPREIT compared to, there were the days of obviously Carlton Savannah, the Florida condo purchases, and a lot of the market at one stage almost wrote off Kingston properties. But since 2015, something happened clearly. I mean, you came in, VM is now, massive shareholder, whether directly or indirectly, 35% plus. What was a game changer? Because a lot of analysts stopped monitoring the company, and then boom, you came in, VM came in. What was the game changer there?
So my role as a CEO, principal role above everything else, is to constantly create shareholder value. That's what I focus on every day. If you ask me what drives me every day, is I think about how can I create or generate more shareholder value for existing shareholders, but also to attract new shareholders. So I have specific metrics that I look at. I look at how much I'm generating in terms of revenue on an annual basis, but also I look at how much cash flows I'm generating from a business, because at the end of the day, as we've spoken before, the more cash you generate, the more you can pay out in dividends. And the other thing that I've looked at is getting information out, because one of the things, the huge deficit I think that was affecting KP was not a lot of people knew about the business, understood the business, and were able to sort of connect the dots. How does KP relate to me? A REIT, as you know, or a real estate investment trust, is an entity where individuals can purchase a stake in an entity that owns real estate or a bunch of real estate assets, and they benefit from the same flows that anybody else who would be able to buy up one single real estate asset would. But if you are someone with a that doesn't have tens of millions of dollars to buy a building, you can, with whatever you have, buy the shares in the company
and that's kind of
benefit.
where the unit trust might be more similar to a REIT in a way, but you're listed, you're a publicly traded company.
That's right. I mean, we don't have REIT legislation, unfortunately, in Jamaica. What a number of major economies, such as Canada and Australia, have done is that they basically have adopted their unit trust legislation and use that for REIT legislation. And we've been strongly lobbying for that here in Jamaica.
Great. We're going to come back to that point. It's an important point. Thanks, Kevin. First break on Business Life Extra. More when we return. Welcome back to Business Live Extra. Kingston Properties is a real estate investment company that was incorporated in April 2008. KPREIT was listed on the Jamaica Stock Exchange in May 2008. It is a publicly traded company on the JSE that engages in the business of multi-jurisdictional real estate investing. The company operates various subsidiaries in Jamaica, USA, and St. Lucia. The group focuses on value-added commercial and residential real estate in the US, Jamaica, and since 2017, the Cayman Islands. Here to tell us more is Kevin Richards, CEO of Kingston Properties Limited. Kevin, welcome back to Business Live Extra.
All right, happy to be here.
It's great. You're just talking about, the whole REIT or REITs, and that I thought there was legislation and maybe it didn't get passed, but you had mentioned maybe there's no legislation in place.
Yeah.
But a lot of companies, as you do, they use the acronym or they use the letters in a lot of their company formations. And do you think that's confusing some of the investors out there, or not necessarily?
Not necessarily. I don't think a lot of people understand what REITs are. The main advantage about a REIT, based on what exists in other markets, is that, and as you rightly said, similar to a unit trust, is that they benefit from, the tax benefits. Let's just call it their tax benefits associated with operating a REIT. So the REIT itself doesn't pay any taxes, but the individual shareholders will pay taxes on, the dividends that they receive.
Right.
So that's the main difference.
But what you've done at Kingston Properties, which is interesting, because in the U.S., under, say, the legislation, I think they're mandated to have to pay out 90% of, income or, profits, etc. Yeah. In Kingston Properties case, your board has mandated that 90% is paid out, or your dividend policy?
So our dividend policy, we amended our policy earlier this year, in February this year, to up to 90% of our funds from operation is paid out as dividends. Because as I said, generating cash flows is important for our business. Right now, for this year, we've paid out approximately $900,000 US, and we pay our dividends in US dollar because we are a US dollar company.
And how do you define when you say funds from operations? Like, what's that defined as?
It's basically looking at profits and backing out all of the non-cash items, in a nutshell. And we, in our disclosures, we put out how we calculate it.
And when you say year to date, let's say your 6 months results are June, you made roughly $927,000 US or something like that. So you've paid out pretty much, almost all the profits.
Pretty much, but the year isn't done yet. So we're about to release
your third quarter.
Our third quarter results.
Okay, and so but what I mean is you're truly living by, even from a U.S. standpoint or some of the G7 countries, kind of, you're functioning more and more, Kingston Properties is functioning more and more like a global REIT.
Precisely. We decided that we're going to adopt the tenets of a REIT from day one. And that means, paying out dividends. The one thing that we've really struggled with, and we've certainly been improving on that, is getting more shareholders to be a part of KP. Most of our ownership is, they're largely close to 90% of our ownership is held by institutions. And typically those institutions don't sell the stock. So, we have a fairly low free float. But what's been happening, over the last 3 years, for example, the number of individual shareholder count has been increasing rapidly. And that's because, more and more people are understanding more about our business. And also, I think there is a great appeal in the fact that we are a US dollar business. So that gives them some sort of hedge in terms of their investing.
And so the new investors coming into, let's say, the share cap table are retail investors?
Yeah.
And what do there has been a lot more marketing and branding of the KPREIT brand. You're out there more.
Yeah.
Do you attribute it to that or the financial performance as well?
I think it's a combination of both, but certainly it's led by the financial performance. I mean, I wouldn't be out there being the face if the performance wasn't good. And one of the things that we're grateful that over the period of the pandemic, I mean, we're still in it, but, certainly when the pandemic hit in March, a lot of businesses were affected. I think for us, maybe in the first 3 months of lockdowns, in that period between March and June, some of the tenants, they had to go through a period of adjustment and, cash flows may have been low. But certainly since March 2020, we've actually, and, I'm very grateful that we've done very well over that period. We're fully occupied in Jamaica and Cayman. I mean, we get calls, people asking for space, and, we'd love to offer them some space, but we're fully tenanted in those markets.
So right now you're 100% even in Jamaica as well?
In Jamaica, we're 100% tenanted. In Cayman, we're 100% tenanted. And in Florida, because we have some of the condos for sale, the occupancy varies.
Yeah. And do you see, a comment sometimes is, income is culturally, as Jamaicans, we love cash back on the stocks or dividends. We love it frequently, even, if you can get it quarterly, great. A lot of investors sometimes, unfortunately, don't even look at the dividend yield. But, if your dividend yield, let's say, is in the low single digits and, you can buy a Carreras and, get that juicy dividend, is there an outlook or ways in which Kingston Properties can be, I don't know, more efficient or can bump up that dividend yield to get to 5% or higher so it's material for shareholders? Is that in your future makeup?
That is something that we look at. How can we generate more cash flow so that we can pay out more dividends and sort of bump up the dividend yield? But remember, the dividend yield is also going to be a function of what the stock price is. So, if the stock price is doing very well as it has been over the...
Right now you're at $9 and you've touched $11.75.
Correct. And if you think about our last fundraising effort back in at the end of 2019, where that issue was at $5.62, that's been an incredible return that has been generated for our shareholders and even those who participated in that rights issue over that period.
So, Kevin, as you mentioned, it's critical what share price, the investor buys at, of course, to calculate dividend yield. But what is kind of the hurdle rate that you as CEO and your team is looking at, before you buy a property, in the Caribbean, wherever you're buying a property to try and eventually get that yield higher and the rental income moving in the right direction?
Yeah, so we typically look at a target net yield of 8% or higher, or a cap rate of 8% or higher in Jamaica and in the Cayman Islands, and we're talking in US dollar terms. In the US, we may go slightly lower, maybe about 6.5%. Typically, we try to stay at least 300 basis points above our cost of borrowing. So at least, we're able to service our debt and give an adequate return to our shareholders. But typically, we've been buying assets at a much higher clip than that. And that's particularly why we like the value add strategy, because sure, the existing or the going cap rate on a particular property may be at 8% now, but you can look and see what improvements you can make to bump that up to an even higher yield. And we've been been able to do that fairly successfully, certainly with our acquisitions in Jamaica and the Cayman Islands.
And do you find, though, it's an important point, you mentioned 8% as, say, the hurdle rate that you're looking at.
Yeah.
But that's one of the criticisms I hear in the marketplace is, okay, they invest in these investment companies. Yes, they're doing real estate. Yeah. You have some debt funding or like a floor. Yeah. And really, it's like you almost have to be getting maybe a return of 12 or 14 so that you can trickle down, whether it's a 5, a 7, an 8% payout ratio, kind of like some of these REITs in the US. Yep. Otherwise, they may buy a Carreras or, I don't know, something else that can spit off a 7, 8%. I mean, so how do you kind of, whether you're at an AGM or whether you're at a function? How do you deal with that kind of comment to get that dividend yield higher?
Yeah, and that's a very important point, Mark, because essentially the way you generate those higher returns is if you're able to create value in some of these properties that you acquire. So it makes no sense buying something, what we call a core. A core is, it's something that a core real estate property is something that a property that you purchase where you don't have to do much improvement, it's just steady cash flows.
Got you.
And those are typically, those are like the 7-8%, but there's not much room for growth. We like the value add opportunities because those, there is room for growth. Because if you can't give the additional cap gains on the value of the property, then you won't be able to generate the kind of returns that those investors look at. So I'd say more than 2/3 of our portfolio is value add. I would consider value add.
And is a value add what you call like the fair value gains? And so the return is really, there might be like a special payout a few years from now if you liquidate a building or sell a building?
Absolutely. Correct.
Have you had that, during your tenure so far, or have you had a kind of a big one-time payment, or have you sold a commercial property yet that there's this big windfall that maybe makes up for the 2-3% dividend yield, or is that in the future? Yeah,
we had a case of that once. It may have been 2017, I think, where we sold a property in West that we had in Westmoreland, and we paid out all of the proceeds basically as dividends for that year.
Okay. So that's a part of the business plan. That's
it is part of it.
How the KPREIT operates. Yeah.
Correct.
And Kevin, going back to something that's really intriguing is kind of going back to the point where we see a lot of companies like this. They start. It takes a long time, like from 2008. But what do you think in a way kind of got KPREIT or got Victoria Mutual interested in? Is it to your original point about there was real estate, so it could survive, maybe the learning curve or those early years from 2008 to 2015?
I think that's a very important point. Having been around for 13 plus years, we've taken our hits, and you've seen it from our financial performance. So people know pretty much everything about KP and what we've gone through. So we kind of have a sense of how the markets that we operate in, how those functions, and what are the right types of assets that we need to be looking at. What are the right areas and locations we need to be looking at for specific assets, and just how we negotiate the leases and even our terms of loans or whatever. I think that experience helped. So I think, I can't speak for VM, but, an institution would probably look at the fact that an entity is fairly experienced in a particular field and will probably want to focus on that, and the fact that they've actually been very successful in that field, which I think KP has been.
Yeah, because when you look at a lot of operating companies, once it's kind of flatlined for a long period of time, they can't turn around. And so I think one of the big intriguing stories with KPREIT is that actually, it was a flatline for a long time, but you wouldn't say magically, but what's really interesting is a big powerhouse brand. You got this anchor investor, I like to say, that just came in. Powered up, and now it just seems like every year is a better year. Your profits, have just come out and are booming, for the 6 months. So something happened there.
So we've looked at how we've performed over the last 5 years, and certainly one of the things, going back to the point, how do we generate more cash and more profits in the business? You look at how are you deploying your funds, whether it's loan funds or equity funds, and clearly, the best strategy is to buy higher yielding properties, one, and two, how you manage your costs. Because our net operating income, which is our rental revenue less our operating expenses, that has been clipping at a rate of at least 35% per annum for the last 5 years.
Okay, so growth rate.
Growth rate. So our compounded annual growth rate has been 35% over the last 5 years. And I think stuff like that would definitely attract an institutional investor.
Got it.
And I think a lot more analysis is done at that level than is done at the retail level.
And you're a public entity, professional management now.
Correct.
I like it.
Correct.
Thanks, Kevin.
Correct.
And we take another break on Business Life Extra. More when we return. Welcome back to Business Live Extra. KPREIT's motto is buy local, own global. expresses that shareholders can access a geographically diversified real estate portfolio that generates sustainable cash flows. The company's holdings comprise several condo units in South Florida and a stake in a 155-unit multifamily property in Atlanta. In addition, office and industrial properties in Cayman Islands and Jamaica. The group changed its functional currency to US dollars in 2019, given that 90% of earnings are in hard currency. We're joined by Kevin Richards, CEO of Kingston Properties Limited. Kevin, welcome back.
Thanks for having me, of course.
You're welcome. Talking about the functional currency in US dollars.
Yeah.
A lot of companies do that. It's a good thing, but sometimes it confuses investors.
Yeah.
They talk about doing a cross listing in US dollars, or sometimes the stock doesn't even trade on a US functional currency. How has it been since 2019 for KPREIT, and just your thoughts and experience as a CEO?
Yeah, so I think that's an interesting point, because from our perspective, it has to happen in stages. First stage was to change the functional currency, because we looked at the business and said we really are a US dollar business, and 52% of our earnings are generated outside of Jamaica. So that was the first stage.
And that means that they are in fact in hard currency leases.
Absolutely.
Okay.
Absolutely. And even here, a large percentage of the leases here are in hard currency.
Okay.
So the next phase, I would say, would be, well, how do we deal with, on the listing side? We've always paid dividends in US dollars, so that's been taken care of. And certainly that's something to contemplate going forward in terms of having a US dollar listing as well.
Is there any future outlook or contemplation where you might even list? I mean, some Jamaican companies have tried it, pull back after a few years, but maybe list on a US stock market to access larger capital, or not really on the horizon right now?
So as you mentioned earlier in the segment, we do have a stake in a property in Atlanta, and we've actually formed a partnership with a group out of Atlanta called Apex Developers.
What are they, Kevin? I mean, are they like a fund of funds, a hedge fund, or are they actually a developer, or what do they do?
Yeah, Apex is basically a real estate private equity entity. So basically, we search out opportunities mainly in the multifamily space in Georgia or along the Sun Belt area of the U.S., and we basically go out and find different investors to come in. So our next step really is to develop the private equity business in the U.S., and our long-term goal, which is something Apex and ourselves are aligned, is that we build this into something larger, which two possible exits. One, to list it as a U.S. REIT and benefit from the same benefits we talked about, because...
Would that be the whole KPREIT, or just the U.S.?
Just the U.S. operations.
And is it a subsidiary now, or what is that operation?
For the
Atlanta multifamily.
Yeah, it's technically, the accountants would have to give me the real, but we have a 38% stake in that property.
In that one?
In that specific property, but we're planning to grow the portfolio to acquire more properties.
Right. And in a case like that, is Apex just kind of finding it, or they actually are putting money into the deal as well?
They're doing both. They're doing both. So as I said, the exit is either we list it as a REIT, or one of the larger players in the space, like a Blackstone or a Cortland, or one of those, could actually look at acquiring that company.
And talking about access, I mean, how do you get in touch with the Apex? Are they finding you in Jamaica and Kingston Properties, or is it through your board, Victoria Mutual, or are you on the hunt as a CEO? As
the CEO, that is my duty, is to go out and hunt the deals.
Okay.
That's actually one of the fun parts of the job, is to always scouting out deals. And we have a very long pipeline of deals that come to us. But it largely comes from building relationships, and it's certainly one of my main roles as CEO is developing relationships with key strategic partners, whether it is going to be in Jamaica or in the Cayman Islands or in the U.S. And that's something we do using our networks, because one of the good things about being in this business for 13 years is that you have a long list of people that you can...
How do you find? I mean, so many of our Jamaican companies, even regional companies, once they venture outside, you find, of the shores, they really get burnt or there's a learning curve. How are you protecting Kingston Properties and the shareholders so that there's not a bad outcome for the U.S. business?
Yeah. So one of the key things that we do first is, and I like to describe it this way, is that we focus on markets that are organically connected to Jamaica. We're likely to go into an Atlanta or a Miami as opposed to Wyoming.
Okay.
Let's give that as
an extreme example, but point
or Utah, or Idaho. And we tend to work with a lot of Jamaican professionals in those markets. So that gives us a little bit of edge because A, they understand our culture and they know those markets. So that helps us to break into those markets a lot easier.
So that's making you sleep better at night.
Oh, absolutely.
That's good. And is there, what else is on the horizon? I mean, growth strategy. You're at 45 million US now, total assets, coming a long way. I mean, at that level, are you getting any peak interest or interest from global investors who are also saying, let's look at you as a vehicle, as Victoria Mutual did, or still a bit too small?
I think we're still a bit too small. I mean, my goal is to get to 100 million. I think at the end of the third quarter, we'll be just under 50 million in assets. So we have quite a little bit of a ways to go to get there. We certainly grew. I mean, if you talk about the last 5 or 6 years, we moved from about 12 million to now 49 million, which is quite an aggressive growth in the last 5 years. So I think over the next 5 years, we could get to 100 million. And it also starts with some of those relationships that you form, whether those relationships are like, an entity like Apex, or even through CGI, which is another entity that we have an interest. We've acquired a limited partnership interest in one of their funds. We've established a very good relationship with those general partners who have wide networks of other investors, from some of the large, well-recognized firms. So we're building out our network in that sense that, at the end of the day, I mean, KP, the same way KP is, my job is to make KP as attractive to anybody, whether it's an individual shareholder, a local institution, or it could be an overseas institution. That's what my job is, to make it as attractive as possible.
Do you find though, as overseas companies, coming to Jamaica, whether it's JamPro, they look at other, whether it's law firms or they look at other public companies, are you getting hit up at all though as, as a company that's now really, you're shining, you're out there, the balance sheet has grown, your functional currencies in US. I mean, is there any interest from, emerging market companies or US companies, KKR, Blackstone, BlackRock, whoever it is, Carlyle, just whoever it is out there that might have Jamaica on the radar finally?
Can't say.
You can't disclose at this time?
I can't say.
Okay. But with the functional currency move to US, what about anything that you're looking at, maybe radical thoughts, SPACs, or with SPACs being all the craze and SPVs in the US, something to give shareholders a jolt?
Yeah, I mean, as I said, this business is always going to evolve. We're shifting a little bit more into the private equity space. As I said, it's still going to be purely exposed to real estate.
When you say that, meaning fund of funds, or when you say like shift into the PE space, like you still will stick with real estate?
We're still sticking with real estate, but we look at how we fund some of our acquisitions, for example, doing more joint venture relationships such as what we have with Apex. That's a model that we're looking to replicate going forward. But also, you look at some of the assets that we have on the portfolio, how we dispose of some of those assets. There are creative ways that we could actually do that. So there's a bunch of things that we have planned.
Right. So you're riding along with Apex in Atlanta deal. Yeah. Are you doing that at all more and more in Jamaica as well, or in Cayman Islands, where someone's riding along with you, or you're riding along with them, kind of in that specific, business case?
Right now, we've just been focusing on the U.S. market because, we've really been doing some rethinking on our U.S. strategy over the last couple of years. We did condos. Back in 2010, that was the perfect strategy back then to purchase 19 units at the loft. That paid off very well for us. So, the condo strategy worked, but the market topped in 2015, 2016. So it shifted back then. But the U.S. is still the largest and most important economy in the world. There is no way we can be successful and not be in that space. So we've been looking at how we participate in that space. And we've been successful in Jamaica and the Cayman Islands, and we want to find a way how we can be as equally successful in the U.S. And it comes back in terms of the property selections. Some of the properties that you like to get in the U.S. require a huge outlay of cash.
Yes.
Which,
yes,
it's
absolutely.
deeper than our balance sheet. So we'll have to do that through joint venture relationships. And that's how, relationships with APEC and others
will come on to stream. Now, with other countries you've mentioned, I mean, a few countries, but anything else, I mean, as you're in Cayman Islands, but any other countries that are on the horizon you can disclose, maybe some other opportunities, whether it's regional or global?
There are a number of countries or jurisdictions that we keep on our radar. We tend to monitor how things are going there, and we try and see how we can build relationships in those territories. But our due diligence process takes a very long time. We don't just get up and go into this market tomorrow just because of X, Y, Z. We really have to understand the market. We've looked at markets as Guyana, for example, but we didn't find something that actually worked for us. So we figured it's best to stick with those markets that we know of. But we have other jurisdictions that we look at. We look at, the DR, for example. We've looked at Panama. Are you
doing anything in DR as yet, or Panama, or?
We've looked at a few opportunities there, but we haven't done anything there.
Yet.
Yeah, we've looked at Canada. We look at the UK. But I think there isn't any huge need for us to diversify that widely. Coming back to the U.S., it's still the largest and most, and it's a vast country.
Huge
we
amount of
haven't
growth
even scratched the surface of it. We've just been in South Florida for the last 10, 11 years, and just now entering Atlanta. There are other markets that we look at, particularly in the U.S. We like North Carolina, we like Georgia, of course, we like Texas. Those are 3 states specifically.
And how do you, being domiciled here, are you personally, or is there like a due diligence team in-house? Do you outsource due diligence? Or is this, again, where the U.S. partnerships come in to actually do the on-the-ground work?
Yeah, it's a mix of both. We do outsource some of the due diligence. Certainly things such as appraisal or inspections, those are done.
Outsourced?
Those are definitely outsourced. But outside of that, we have discussions with local players. Even if they are not the partner in the deal, we talk to other people just to get, other perspectives on the market and even some of the partners you're dealing with.
Sounds good. We're going to talk more about that.
Yeah.
We take another break on Business Live Extra. More when we return with Kevin Richards, CEO of Kingston Properties Limited. Welcome back to Business Live Extra. Recently, Kingston Properties Limited acquired a 1.5-acre property in Crossroads, Kingston for Jamaican $75 million. In addition, KPREIT also recently completed an agreement with a developer in the Cayman Islands to acquire 3 mixed-use units. For the 6 months ended June 30th, 2021, KPREIT reported a 59% year-on-year increase in rental revenue to $1.4 million US, while net profit amounted to approximately $927,000 US in 2021 versus a loss of approximately $343,000 in the prior year. KPREIT's total assets ended June 30th, 2021 at US $45 million, an increase of 14.5% year on year. What are the future plans, acquisitions, deals, and potentially additional capital or debt raises for KPREIT? For a final time, Kevin Richards, CEO of Kingston Properties Limited. Kevin, all right, we know you're happy to be here on Business Live Extra.
Absolutely.
It's good to have you, 2 decades plus in financial sector. KPREIT is in good hands, 6 years plus there. So, the outlook, we've been talking quite a bit about the outlook for KPREIT and everything, boosting the dividend yield or boosting the profitability. You're buying a lot of industrial office mixed use. Yeah. The smart money has always said to me, long term, or the big money is always in commercial. Residential is like a headache. Somebody calls you about the toilet. the bathtub, it could be anything, a tile.
Yeah.
So the smart money is in it. And KPREIT for the last couple of years now, I mean, every announcement is industrial, warehouse, mixed use. I mean, lots of big words.
Yeah.
So is it just being smarter with your money now, or is this the future of KPREIT? I mean, are you just going to keep doing industrial, or what's happening here for your shareholders?
Yeah, so we've looked at what's been happening even pre-pandemic. There has been a huge growth in the e-commerce business. So logistics and warehousing has been very important. So we've been looking at warehouse properties, even before the pandemic. I think the pandemic sort of kicked that up, at 10x. So we find that there's a lot of demand for warehouse space, and that is at various sizes. There are people who want large warehouse spaces, there are people who want small warehouse spaces. There is a huge underserved market for persons supplying, small. When I say small warehouse spaces, things that are like 2,000 square feet footprint. There are many small businesses that are looking for spaces and want to operate in an area that is, safe and secure, and they can, actually, do better logistics for their businesses. So that's the whole idea behind that Crossroads property, for example, is to build some small warehouses. So is Crossroads, you're building from scratch, or are you buying kind of big and chopping it into pieces? This is going to be one of our first greenfield projects.
So you are doing some greenfield?
We are doing some greenfield, just because there isn't the inventory in this particular space that we're talking about. There are a few large warehouse properties out there, but unfortunately most of those warehouse properties were built back in the 60s when Jamaica was more of a manufacturing country. And we've shifted away from manufacturing more to distribution. So with distribution, those warehouses have to be reconfigured differently. People want higher ceilings so they can stack 5.
Are you going to be selling any of the units to bring in some cash or realize some of those paper gains?
We haven't decided on that yet. I think we're still going with the rental model as a first option, but depending on on how the market is, because by the time construction ends, we may see an opportunity to cash out of that investment and go and do another and replicate it elsewhere.
And Kevin, I find a lot of companies aren't really clear on this that are listed. I mean, are you building an in-house construction team, or is everything outsourced? I mean, it seems both models work, but a lot of the listed companies, or call it shareholder companies, they seem to be confused on what's the right model.
Yeah. Our model has been always outsource what we can outsource. We've kept our staff complement, for example, fairly thin over the life of the company. But I think for specific areas, certainly on a project by project basis, my preference really is to outsource certain things. We would identify the properties, we do the analysis. That's what we do. We are really an investment and financial firm. So we do the analysis thing. But in terms of the hardcore construction and stuff, that's not something that we really want. We're not a construction business. That's not what we're in. We're a real estate investing business.
Is it a little bit of a hint to the market, though, that, I mean, you are open, I'm sure you get proposals daily, weekly. I mean, you are open to looking at maybe some other greenfield projects, or if it's in residential or commercial, if it gets the appetite going?
So, yeah, I mean, we're always open to looking at opportunities if the numbers make sense. It's not likely that we will look at something in the residential space because we don't have that kind of expertise. We've primarily been in the office and industrial space for most of our existence as a company. There are lots of other people out there that have that kind of experience, so I'd leave those kinds of deals to them. But certainly if it's something in the industrial space, we will definitely look at it, one. And two, we are looking at another greenfield project, and this is in the office segment. We own a property in New Kingston at the corner of, it's 2 Grenada Crescents, which at the corner of Dumfries and Grenada.
That's one you purchased a couple of years ago?
In 2018, at the end of 2018, we acquired that building. And we acquired a property on Dumfries Road, which is just, 2 doors down, if you want to call it that. And we figured it would be a good complement to that building. So we're thinking of doing a multi-story office building there. And a lot of it comes from we get calls from time to time. People, do you have any space in the Grenada Crescent building? Do you have
So
space?
you actually are getting calls as well
People always
for
ask.
direct rentals.
People, yep, and particularly for large footprint office space. So there's still a huge debate as to the future of office. I personally think that there is going to be a hybrid model going forward of work from home and being in the office. But I think certainly for collaboration, etc., there is going to be still the need for offices. And I think also a lot of office space is going to be repurposed for other uses.
Okay.
We're seeing a lot of that happening in the States, where what was used to be, a typical office space that had all these cubicles are now more open space and perhaps being used for medical labs or life sciences or that kind of thing. I think there's going to be some repurposing
Are you seeing any of that in Jamaica yet, where, I don't know, maybe empty offices or are being repurposed to apartments or condos, or we're not seeing that trend yet?
It hasn't started yet, but that is a huge opportunity. I mean, we've looked at opportunities, for example, in the Cayman Islands, where certain spaces that were designated as office, thrived as office maybe 10 years ago, but because, for example, its location close to the ports or whatever, there is a view that could be repurposed for residential, as an example.
Yes.
You're actually living on the waterfront.
Right.
So I think we tend to lag behind in Jamaica. We see the trends elsewhere, and then we need to
and eventually it comes there if needed. Now, Kevin, something that you've mentioned before, I mean, sometimes in your annual reports or MDAs are about, buildings being green or green buildings. Yeah. And is that about being a good corporate citizen, or is it about accessing some funding globally? Is it a mixture? We've always been reading about climate change and green bonds and green in other sectors, but what's that kind of modus operandi by KPREIT?
Yeah, so me personally, I'm a big believer in climate change. There are a lot of people who don't believe that it exists. Okay. But I'm very concerned about the environment and the future of it, and particularly when you're looking at the built environment in Jamaica, there needs to be a lot more done in terms of planning and how we structure developments in different parts of the country. The thing that concerns me a lot is, how well are we using, for example, the natural resources? So, solar, wind, how are we incorporating those in terms of some of our existing properties?
Do you find it's a challenge, though, because you're buying these existing buildings, that might have been built decades ago, and you're trying to balance the shareholder, value proposition, right. and as you said, you're being a good corporate citizen, a board of directors, and you want to, implement these green, items. I mean, how are you balancing that and justifying it?
Yeah, so there are two aspects of it. One, there is what we want to do, not only just because we want to be a good corporate citizen, but, what is happening in terms of some of the tenant base is that there are some tenants, and typically those are tenants that, have large overseas headquarters. They're looking for properties that have some sort of green focus or some sustainability element to it.
So tenants, whether it's multinational companies or whatever, they actually are asking you if this is like a green certified property?
It's part of their requirement from their head office. They have to be in buildings that have some.
So you're saying in Jamaica, I mean, I just haven't seen it or read about it.
It's not huge, but I know of one particular entity where that is.
But in Jamaica, we actually do have similar to how there's HACCP in manufacturing and ISO, 9, etc. Is there actually an entity or a body here that can certify, and say this building is green?
Yeah, so there is, NEPA has a program, it has a green business plan, which essentially they will look at, give you certain guidelines on how you can achieve some sort of green certifying of a particular property. And they have a full outline on that, and you can actually, contact them and work with them on doing that. But we're also looking outside of Jamaica because, our portfolio is wide. Yes. We're also targeting a lot of different investors and different types of tenants. So we're looking at being certified, say, maybe through Green Globes or one of those entities, so that, hopefully by 2024 we can say, even if it's one or two properties, that they are green certified. No, we're actually doing things, as again, we're looking at alternative energy sources for some of the things. I mean, simple things like changing your your light fixtures from,
Okay. I got
to
you.
LED or
So you're looking at
solar.
all options.
All
Yeah.
options, greening of warehouse spaces, tree planting, rainwater harvesting. We're doing all of those things already.
And Kevin, your market cap, looking at it, 5.8 billion or
Yeah.
just around 6 billion or so. I mean, there is some debt on the balance sheet, so I mean, kind of close to your net asset value, somewhat with your market cap.
Yeah.
Stock not doing badly. You're kind of in the middle of the 52-week high or so. $9 a share.
Yeah.
When you look at those, dynamics, and you look at WeWork is finally back and kind of, did its stint in the US after having some issues.
Yeah.
Any things that you're looking at creatively going forward, or the next 5-year future? Or like, would you look to maybe do some leases and subleases to bolster returns, although there is risk? Risk doesn't always work out. But
Yeah.
what's a quick kind of 3-5-year future for KPREIT to make it even more relevant to investors?
Yeah, so constantly evolving. I think that one of the areas that we think is going to be really big is where we're focusing on, which is in the industrial space and the development of more different size industrial properties in different jurisdictions, largely because of where the growth is in that market. I don't think that there is going to be a huge expansion in maybe office, but I think there's going to be some sort of resurgence over time, because as economies grow, new businesses are formed, they're going to need spaces. So what is there is going to be taken up. I don't think there'll be a lot of new additions to the stock. Well, when that happens is that you create an inventory problem. So, and that's why you have markets operate in cycles. You go up and then you level off, down, and then back up again, because of really how inventory is controlled. So I think just understanding the market dynamics is really how we're going to keep riding. I mean, that's what we've been doing, and that's what we're going to continue to do. We don't want to stray too far from our business model. And we know what works. We know what works.
Yeah.
So we're going to stick with what works, but tweak it where possible.
Yeah.
I think the most exciting thing for us is our joint ventures going forward.
And clearly it's been working for the last 6 years, and you're doing a great job.
Thank you.
And KPREIT is back.
Yep.
That's good.
Yep.
Great having you on Business Live Extra.
It was my absolute pleasure.
No one. Thanks for joining us.
Anytime.
Fantastic. Another edition of Business Live Extra. Remember, don't wait to buy real estate. Buy real estate and wait. We've been talking with Kevin Richards, CEO of Kingston Properties Limited, KPREIT. Don't forget, you can watch us online at cvm.com/videos/Business Live Extra. Thanks for joining us.